What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our broad market, so SPY the Qs and IWM. On the left-hand side, as always, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We follow the broad market quite regularly. Anyways, with that out of the way, the S&Ps gave us a beautiful close today because we now have an inside bar that closed relatively strong up at the highs. Nonetheless, the two-day equal highs are going to be a potential breakout point for follow-through to the upside after a day of digestion from this overall up move right here. If you watched the weekly watch list over on the main channel on Sunday, yesterday, then what you'll remember is that I wanted to see some consolidation here and potentially a break to get us into the resistance trend line. That area and that target overhead is roughly 444 up to 445, and I would seriously reconsider the chart once we get there, right? Remember that it's also the daily 200 SMA. It's the horizontal area from here coming from the top of that balance, the low end of this balance right here. It's where the more aggressive selling really stemmed from. There's a lot of technicalities around that 444 to 445-ish zone, so that's why it's a significant overhead target, and we will reevaluate, reassess the charts when and if we do get there. Remember, it always matters how you get to a destination, not just that you're at the destination. The context is always king. So that's our upside target on a break of the two-day highs. Obviously, after that, you can monitor for continuation. I don't know if it's a likely target into, at least tomorrow's trading range, but 452 is the next number we have on our charts to the upside. To the downside, a breakdown of the two-day lows, because essentially what we have is just 2 days of balance, right? If we break the lows, that's also a valid setup. So underneath 429 brings us closer to, I would start to imagine, the point of control from Thursday. And again, if you're not familiar with where that number's coming from, go watch the video from the main channel that we released yesterday. We talk in depth about the origins of 417.50 and why it's a critical level to the downside. So that's what we have from the daily perspective. Let's take a look at the 30-minute intraday and just see how this could potentially unfold. Some things that I like in here are the fact that we made it, technically speaking, a higher low on the day, right? So that is important, above 429. That strikes me as being slightly more bullish than bearish. And again, we had a balanced day, up, down, back, up, and we did make that new lower low, but there was no follow through to the downside to make the equal low on the daily time frame. So again, slightly more bullish than bearish, but not an all-out, needs to break out to the upside piece of data. Instead, what we can start to look at as well is our Fibonacci's, just to gauge relative strength, right? If we analyze this current move that we're looking at, really Thursday and Friday of last week, notice that the 38.2 is much lower than where we've pulled back so far. So we're in the realm of a healthy pullback area. This is nothing more, in my estimation, than price digestion of these higher prices. We're getting price acceptance here. Now we're going to see, can we get a break of the two-day highs for the move higher, right? That's what we're watching out for. So 429 is your downside, level that must hold. I probably wouldn't want to see the 38.2 at this point in time. Let's talk about some scenarios though, and how this may actually unfold and how you can recognize that it's unfolding in front of you, right? So if we get the break, we want to see price acceptance over 437. Everyone always says price acceptance, but no one explains what it means. Here's what it means. If we get the break and we pull back and hold up there for a higher low, that's price acceptance above 437. If we break and we get bull flag consolidation on like a 5 or 15 or 2-minute chart that's much higher than 437, that would strike me as price acceptance or price confirmation. If we do something like this, break and then roll back over underneath 437, that is clearly not price confirmation or price acceptance above that level. As a matter of fact, because we can call this a two-day balance, if we get something that looks like this, that's a look above and fail, we would target the bottom end of the range, which is the two-day lows around 429. And we already mentioned that if that breaks, we have this as a downside target at 417.50. Go watch the main channel video to understand the significance of that level. So those are your scenarios to watch out for tomorrow, and I suppose into the remainder of the week, because we can't also write off the fact that we could just get another day of balance. This could turn into a 3-day balance area that looks something like this. It is a possibility, but we know where we're going to start getting involved in trades based on these levels, correct? So that's our S&P in a nutshell here. It's becoming a little bit more bullish than bearish based on today's price acceptance higher. Let's continue along and talk about the QQQ for our Nasdaq 100. Zooming in on this chart, a little bit sloppier, right? And I say sloppier because it's going to be a little bit more difficult to trade, but it is still a bullish chart. sloppy does not necessarily equate to bearish. The reason I say sloppy is because we don't have two equal highs. We clearly set a new higher high, and we obviously have a better, more significant higher low. Now, again, that doesn't mean that it's bearish. It just makes the trade harder to pull off, because now what are you going to do? Take the break of a one-day high? It's not as clean as a break of a two-day high after price digestion on an inside bar. So that's all I meant by a bit of a sloppier setup here. We're also much closer to that resistance trend line, so that's not going to act as a magnet or a target like it is in our S&Ps. So although this chart is bullish, I think the more actionable setup is unfolding in our S&P 500. So what are we watching for here? Well, continued higher highs and higher lows. If we start to do something that looks like this, that becomes more attractive, and then that recapture area, just like we talked about in the SPY, based on prior balance here, aggressive selling really stemmed from, that's your 353 area in the QQQ. So perhaps this does something like this and then builds out a bull flag in this area instead of putting in two-day balance back-to-back that we have in the SPY. It's just something to theorize about, something to think about, but the setup here isn't as clean. Our levels are not as clean for entries and exits. To the downside, I suppose, actually, it is fairly clean. If you take a look at the 30-minute intraday time frame, you can see this shelf of support right here around 342. I would start to use that instead of this 344, which, as we know, was the low from here, also the high from last Tuesday. You can clearly see that this was it was respected in a much more respectful manner, I suppose, would be the wording that we could use there. So 342 is your level to the downside. So let's go ahead and pop that on. Oops, not text. We want the horizontal level just so we have it on our radar. Okay, so that level wants to hold 342. As long as we do something like this, again, maybe the bull flag pans out as something like this, and then we get a break to here, or maybe it's higher. Oops, not sure what happened there. Apologies for the weird zoom. Maybe that was a glitch. Regardless, maybe it looks something like this, and then it's a breakout up and over that 353. The chart's not bearish. It's just not as actionable, as I pointed out, as our S&P 500. If this level breaks, what's the target to the downside? I would certainly start eyeballing this 334 quarter level coming from your low and then equal low right here. After that, the equivalent of that 417 level in our SPY is right here in the QQQ's point of control from the Thursday session around 329, and that needs to hold. If that doesn't hold, kiss this thing goodbye. We clearly have a lower high from here to here. We can then get trend continuation to fill this gap below us around 315, right? And again, it does look more bullish than bearish. I'm just sort of talking through all of the scenarios if we get the breakdown that stems from a failure to hold 342. Let's quickly be congruent here and take out the Fibonacci's as well from the low all the way on up to the high. Just get a sense for where that 38.2 is. You can clearly see all of the consolidation is extremely healthy, well above your 38.2. No major issues with that there. Let's move along here and wrap up our last broad market index with the IWM. Of course, Russell 2000 and our small caps. This is the cleanest double bottom that we have across all of our indexes. You'll notice that our lows are relatively equal instead of forming a much lower low on the last Thursday session. And the neckline of the double bottom is simply up here around 208, which, as we know from the weekly time frame, is the bottom end of this range that we were stuck in for nearly a year, if not longer, right? So that 208 is still going to be your actionable level to the upside until we get up there. I would be a little bit patient. Remember that just like in our QQQ, we did set a new higher high today and a higher low. It's not going to give us a two-day breakout like we have in the S&P 500. So be a little bit more cautious of this one. I would imagine we maybe get here, higher low pullback, then reattempt. That's where it's sort of game on after we confirm a higher low and break the resistance trying to recapture 208. Maybe that's more of a risk-on signal across our broad marketplace. We'll see. We'll see when and if we do get there in the first place, but 208 still is your pivot in IWM until it, excuse me, apologies for that, until it breaks. I really don't think that this is really worth getting chopped up around. You can see that there was a little back and forth two-sided action that happened here in the past. Patience, right? If you break 208, that's your long entry. If you roll over off of it, maybe we come back down here and revisit that 197.15 coming from lows, and then held there on the, Friday session as well, right? Friday's lows across the market right now are very, very important for the two-day balance-ish type setups. We want to see those areas hold, get consolidation price acceptance above, and then continue on our merry way if this is going to be a larger reversal across our broader markets. So last but not least, IWM on the 30-minute time frame with the Fibonacci's from the low all the way on up to the high. What do we have here? Again, price acceptance, price digestion well above your 38.2. We can essentially afford to pull back to that 197. I would just opt for structure instead of blindly following the fib. So any consolidation that happens in here is fine. That would be, ideally it's just one higher low pullback. Then we get an attempt here for the break back above 208, as we pointed out earlier in today's video, breaking that neckline as well. So that's really all I've got for you in our broad marketplace. As of right now, I think I've harped on it long enough. SPY is where my focus will be, just because the setup here is much cleaner than what we have in all of our other three indexes. Things are subject to change with any gaps that may happen overnight, but I like what I see so far. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.